All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today's February 24th, 2025. The new week is upon us, and we got a couple of big ones to start the week, and it is gonna be a big week. Of course, we got NVIDIA earnings later this week. We got Supermicro's deadline tomorrow. It was actually due back in August, but these things can't be rushed. But the big story this morning, two big ones this morning. The first one is Apple. Apple made a big announcement here, and it really caught me off guard. $500 billion, half a trillion. They plan to invest in the United States over the coming years, including a new 250,000 square foot factory in the Houston, Texas area that they're going to use to build AI servers to run Apple Intelligence. Now, this was, first of all, really news to me. Apple building their own servers at their own factories, that's kind of being lost in this whole story. That's not a very Apple thing to do. Apple outsources all their manufacturing, like Foxconn builds their phones. It's very unusual to see Apple planning a big factory to build their own servers. That's the first thing that jumped out at me. Also, pay attention, you Dell and you SMCI guys. I can't imagine any SMCI guys are still watching this channel at this point, but Apple building their own servers, probably not good news for Dell business or SMCI business. That's a very narrow margin business, AI servers. And, well, if a company like Apple is getting into the business, adding competition, you could see those very thin margins evaporate very quickly. Also, very unusual, this facility that Apple plans to build, they plan to have it up and running by 2026. That's next year. And as my moderator, Mish, pointed out, there's probably a really good chance if it's going to be up and running that soon, they're either using a building that's already been built and they're just going to retool it, or it's something they were planning on doing all along and they've already started and they're just announcing it now. We've seen that kind of stuff before, like a lot of those Project Stargate announcements were projects that were already being built. They just took all that crap and put it in a box and wrote Stargate on it. So it's possible there's some of that going on with this Apple story, because it's a very ambitious timetable to build a 250,000 square foot facility in under 2 years. That struck me as a little odd as well. Also, Apple planning on hiring 20,000 U.S. employees for this facility, along with others. So, a lot of reshoring news this morning coming out of Apple. Obviously, tariffs are playing a role here. AI servers would be included in these across-the-board tariffs that they're talking about putting on semiconductors. So, I'm sure Orange Man is playing a role in this. I'm sure this has something to do with the trade war that's been going on. But that's a very big story, and I'm sure you're going to hear a lot about this in the news in the coming days. I'm sure the politicians will be talking about it as well. Now, the other big story going on this morning, this one broke over the weekend. I had a lot of people tag me on X on this story. Thank you, everybody who brought this to my attention. I appreciate that. It involves Microsoft, and there was this analyst note from TD Cowen. And according to TD Cowen, and according to their channel checks, it looks like Microsoft is cutting data centers. Now, channel checks could mean a lot of things. Channel checks is like, okay, we're going to check in with the guys who sell the connectors for data centers, check in with the guys who install the server racks. We're going to check in at all these various points along the supply chain and see what their sales are doing. What are those guys saying? And based on those channel checks that TD Cowen has done, they're estimating, in their words, that a couple hundred megawatts of data centers are being canceled by Microsoft. Now, I've been saying on this channel for a while, in this great game of capex chicken, that Microsoft will be the first to blink. They've already given us some hints that they're starting to blink already, right? It started in December when Satya Nadella went on that podcast, and he said that right now I'm more power constrained than GPU constrained, as if to say, okay, we've built enough data centers. Now we've got to figure out what the hell we're going to do with them, how we're going to power them. Are we going to be able to rent these things to anybody? So that was the first hint that Microsoft was blinking. Then they announced plans to pause the expansion of one of their data centers in, I believe it was in Wisconsin, that they were planning on doing. So that was the first hints that Microsoft was already blinking in this big game of capex chicken, where big tech just lights their own money on fire, and whoever stops first loses. It's kind of how that works, apparently. Look, all of these stocks, this whole AI bubble is dependent on big tech endlessly throwing cash into the burner to keep this bubble inflating. The second that stops, people are going to be like, okay, now what do we do with all these data centers? Obviously, DeepSeek came out and threw a whole big monkey wrench into that. Now, there was this silly story going around about Jevons paradox and how, oh, because of DeepSeek, that means we're going to need more compute. Yeah, it doesn't really work that way. Sometimes Jevons paradox works, sometimes it doesn't, right? Like if there's a more fuel efficient engine comes out, typically it makes cars more affordable and it results in more burning of fuel, right? That's Jevons paradox. But then you also have things like when digital cameras came out, it wasn't exactly good for Kodak film. So Jevons paradox is not a universal rule of economics here. But this TD Cowen note over the weekend is supporting some of the fact that Microsoft is pulling back their data centers. Also included in these channel checks said that statement of qualifications are no longer being converted over into leases. Now, that's kind of like how building permits flows into housing starts. Statement of qualifications are typically what precedes a lease in a data center. Microsoft leases a lot of their data centers. So not only are these channel checks saying, hey, we've canceled some existing leases, but they're also not signing a lot of new ones. The flow of new ones is being cut off here. And on top of that, we've also got some of their international capex spending is being redirected back to the U.S. There's those tariffs showing up again. Now, in Microsoft defense, today they came out with a statement to Bloomberg. They basically reiterated their plans for $80 billion in capex this year. Now, I have speculated that $80 billion in capex is not necessarily $80 billion worth of GPUs because they've specifically said we're not GPU constrained, we're power constrained. So I think Microsoft is planning on spending most of that $80 billion in capex on power investments for their data centers, which would fall under the language of data center infrastructure that they said they were going to spend that money on. So Microsoft is kind of issuing a softly worded defense of their capex, not stopping short of outright refuting this TD Cowen note. So that's got investors on edge. It was causing a big stir on X over the weekend. I don't know if it's going to move markets today. This week, it's all going to be about those NVIDIA earnings that we're getting on Wednesday, and to a lesser extent, the Supermicro story, which comes to a crescendo tomorrow. They've got about 48 hours to get that thing in. Oh, I'm sure it's going to be great. I wish I had the confidence of Supermicro investors in anything. These guys are so convinced that everything is fine at that company. To be so optimistic, it must be liberating. I can't imagine what it feels like to be one of these people. Meanwhile, Berkshire Hathaway is out with earnings, and it was big, up 71% in the fourth quarter. Berkshire Hathaway is firing on all cylinders. Their insurance business up 302% from insurance underwriting. Now, they also warned they were going to lose a lot of money because of those LA fires, so it looks like that insurance story, it won't be going on indefinitely. But the big story with Berkshire Hathaway is that cash pile. Once again, Warren Buffett is up to $334.2 billion of cash. That is up in the fourth quarter from $325 billion in the third. So they keep selling stock. They keep adding to their cash pile. They are the biggest holder of T-bills in the world. Warren Buffett, they're not buying Berkshire Hathaway stock. They're not doing any stock buybacks. So somebody pointed out on X, I can't remember who it was, or I'd give him credit. Somebody on Twitter pointed this out, that Warren Buffett would rather make 4% in T-bills than buy back his own stock. What does that tell you about his opinion of this market? I mean, yeah, Berkshire Hathaway still owns a ton of stock, but they are sitting on more cash than ever by a huge margin. The cash pile is growing, and, well, those T-bills are making them a lot of money. Also, Warren Buffett made a very interesting statement about bonds in part of his annual shareholders letter. And it almost sounds like Warren Buffett may be warming up to gold a little bit. Maybe that's me taking that a little bit too far, but it sounds a little bit like he's warming up to gold just based on what he's saying on bonds. But still, Warren Buffett is not a fan of gold. He never has been. We also had the biggest hack in crypto history on Friday. Crypto exchange Bybit was hacked for $1.5 billion worth of Ethereum. It is believed that the North Korean group Lazarus is behind this hack. That's the biggest one ever. Just a reminder, guys, as the SEC pulls back their enforcement of the crypto industry, the fraud is going to increase. We are late in the cycle of this recent halving that happened last April. The fraud is going to continue rising until it reaches a fever pitch, causing crypto winter when the market crashes. It will happen. It's happened 3 times before. Make sure you're preparing for winter. And as always, don't ever leave your coins on the exchange. We were talking about Berkshire Hathaway and the big pile of cash before. You know who else is sitting on a lot of cash now? Jamie Dimon, the CEO of JP Morgan. He abruptly sold $233,770,000 worth of stock on February 20th, according to SEC filings from JP Morgan over the weekend. Last year, he sold $182 million worth of stock. This guy is dumping stock like never before. You may recall last year when he sold, it was the first time ever that Jamie Dimon has sold any stock. And now combined, I've seen some people are saying he sold about a third of his position. I haven't double-checked that math. I'm not sure that really adds up. But combined, we're looking at over $400 million worth of JPM that he has dumped in the last 2 years. The rich guys are selling. That is pretty clear. Also, an interesting story out of the Congo. They're limiting cobalt exports because cobalt prices are low. That's another story about electric vehicles and the lack of demand for them, that the countries that sell the metals going into the batteries are having to limit exports in order to support prices. And Domino's Pizza wrapping up the day with earnings that were pretty lackluster because the bifurcation of the American economy is on full display this morning as Domino's is not doing very well. Same-store sales growth, very lackluster at just 0.4% for the fourth quarter. We got a lot to talk about. Why don't we shrink my big million of a head and let's see what's going on in markets. And this is when I usually ask you guys to hit that like button, if you so please, for the YouTube algorithm. And if you're new here, hit that subscribe button and come on back tomorrow because we do this one every business day. Right now, we've got the S&P 500 is up by 27 points, about 0.5% higher. Climb back a little bit of those gains from Friday. Friday was a bloodbath in markets. The Dow, meanwhile, is up 227 points. Again, clawing back some of the losses from last week, about 0.5% higher. And the NASDAQ is up 97, 98 points, about 0.45% to the upside. So we could maybe call this a dead cat bounce after Friday's sell-off. Maybe stocks are up across the board. Let's take the win. Meanwhile, the DXY is up 6 basis points at 106.67. That's a fraction of a percent higher. Modestly stronger dollar this morning. Looking over at the bond market, we have got yields are moving higher, especially on the long end this morning. The 30-year Treasury, 4.691. That's up 2 points and change. The 10 years at 4.446, also up about 2.5 points. The 2 years at 4.213, that's up 2 points. And the 1 month is unchanged at 4.321. Not a lot of movement in bonds this morning. Looking over at the gold market, we've got spot gold is at $29.49. That is within striking distance of an all-time high, up about $13 or 0.5% higher this morning. Gold continues to shine here. Silver, meanwhile, not doing quite as well as gold, but spot silver is up $32.60. That's about 6 cents higher, 0.2% to the upside. I like the shiny. Copper, meanwhile, down about 0.75%. Platinum is down 1.2%. Palladium is down almost 3.5%. And crude oil is at $70.45 for April WTI futures. That's up by about a nickel here, or 0.06% higher. Not a lot of movement in oil. Let's look over at Bitcoin. You know, it was looking on Friday like Bitcoin was threatening to break out. We had shown this candle here. We had broken above the 50-day moving average. And then that buyback hack came in and just totally torpedoed that move. It ended up closing down. Bitcoin never really closes, but it ended the day down on Friday, and it continued to sell off a little bit over the weekend. Now we're right back in this channel that we've been stuck in for about 3 weeks now. $95,449 for Bitcoin as priced on Coinbase. That's down by about another $800 this morning. Now, we do have some news here. We got MicroStrategy or Strategy or whatever they're calling themselves this week has acquired 20,356 Bitcoin for $1.99 billion at $97,514 per Bitcoin. Look, Michael Saylor's infinite money glitch remains in effect right now, although I'll add he bought at 97,000, so he is down somewhat on those. but his average price here now, let's see, MicroStrategy holds 499,096 Bitcoin. They paid $33.1 billion for it, or about $66,357. That is his average cost basis. Also going on this morning, here's this story about the hack. Hackers steal $1.5 billion from exchange Bybit in biggest ever crypto heist. Bybit, a major cryptocurrency exchange, has been hacked to the tune of $1.5 billion in digital assets in what's been estimated to be the largest crypto heist in history. The attack compromised Bybit's cold wallet. That's interesting. It was their cold wallets that got hacked here. Somebody gave up their keys. I don't know who, or somebody stored them in an unsecure location. An offline storage system designed for security. The stolen funds, primarily in Ether, were quickly transferred across multiple wallets and liquidated through various platforms. Blockchain analysis firms, including Elliptic and Arkham Intelligence, traced the stolen crypto as it moved to various accounts and swiftly offloaded. The hack far surpasses previous thefts in the sector, according to Elliptic, that included the $611 million stolen from Poly Network in 2021 and the $570 million stolen from Binance's BNB token in 2022. Analysts at Elliptic later linked the attack to North Korea's Lazarus Group, a state-sponsored hacking collective notorious for siphoning billions of dollars from the cryptocurrency industry. The group is known for exploiting security vulnerabilities to finance North Korea's regime, often using sophisticated laundering methods to obscure the flow of funds. They're using these sophisticated laundering methods to obscure the flow of funds, and yet Arkham and Elliptic apparently were able to pin this on the North Koreans within about 5 minutes of it happening yesterday. If that seems a little suspicious to anybody, well, it does to me as well. There are some on X who are questioning the North Korean cover story. I don't want to get too much into that because I'll be honest with you guys, the on-chain analytics and the tracing of wallets, a lot of that stuff goes right over my heads, and I just cannot for the life of me understand what these people are saying sometimes. But a lot of money was stolen, let's put it that way. All right, let's talk about the big one, though, this morning. Apple to open an AI server factory in Texas as part of $500 billion in U.S. investment. And there's Tim Cook there. Apple plans to open a new factory for artificial intelligence servers in Texas as part of a $500 billion investment in the United States. The U.S. tech giant said it would work with partners to open a 250,000 square foot server manufacturing facility in Houston to produce servers for Apple Intelligence, its AI personal assistant for iPhone, iPad, and Mac computers. The new factory, which is slated to open in 2026, will form part of a major investment plan Apple is committing to over the next 4 years. In addition to the new Texas facility, Apple said it also plans to hire around 20,000 new employees across the U.S. Most of the new hires will be focused on R&D, silicon engineering, software development, and AI and machine learning. We are bullish the future of American innovation, and we're proud to build our long-standing U.S. investments with this $500 billion commitment to our country's future, Apple CEO Tim Cook said on Monday. Look, it's pretty obvious tariffs are playing a role here. We'll see if this actually happens. And I'll be honest, I mean, the timeline, 2026, that is lightning fast for a facility that big. I'd be very surprised if they meet that target, or I would not be very surprised to learn that this facility has already been under construction for years and they're just taking credit for it now. Also, the fact that Apple going to build their own servers, again, not good for you Dell and Supermicro servers shareholders there. Apple currently trading at $243.37. It's down about $2.30 or about 0.9% this morning on this news. Shifting gears over to Microsoft. Microsoft cancels leases for AI data centers, analyst says. This could potentially be huge news. Now, let me just say, the only reason I made this the second story today and not the first story is because a lot of this is unconfirmed. All right, this is really just a guy theorizing. He's extrapolating based on empirical data. What empirical data? We don't know. They're just telling us channel checks. TD Cowen has a pretty good track record, though. That's worth pointing out. So I'm not willing to just dismiss this story outright. Let me just put an asterisk next to this one, guys. This has not been confirmed. Microsoft has begun canceling leases for a substantial amount of data center capacity in the U.S., a move that may reflect concerns about whether it's building more AI computing than it will need over the long term, TD Cowen said in a report. OpenAI's biggest backer has voided leases totaling a couple hundred megawatts of capacity, the U.S. brokerage wrote Friday, citing channel checks or inquiries with supply chain providers. Microsoft has also stopped converting so-called statements of qualifications, which are agreements that usually lead to formal leases, TD Cowen said. That was a tactic rivals such as Meta Platforms employed previously when they decided to cut back on their spending in the metaverse years ago. Microsoft is reducing a portion of its planned international spending to the U.S. too, TD Cowen said, which suggests to us a material slowdown in international leasing. A potential pullback by Microsoft on spending and data center construction raises questions about whether the company, one of the frontrunners among big tech and AI, is growing cautious about the outlook for demand. The company has said it expects to spend $80 billion in this fiscal year on AI data centers. The actual wording they used was data center infrastructure, which in my opinion could include power plants as well. And on late CEO Satya Nadella said Microsoft has to sustain spending to meet exponentially more demand. It somewhat flies in the face of what they were saying in this TD Cowen note. Now, Microsoft, in a statement this morning, reiterated their spending target for the fiscal year ending June. That's the $80 billion in capex, but they declined to comment specifically on the TD Cowen note. So they didn't confirm or deny, they just reiterated their $80 billion number. While we may strategically pace or adjust our infrastructure in some areas, we will continue to grow strongly in all regions, a company spokesperson said in a statement. Our plans to spend over $80 billion on infrastructure this fiscal year remains on track as we continue to grow at a record pace to meet customer demand. So some wishy-washy, denials from Microsoft this morning. Look, Microsoft stock, it's actually up 0.25% on this news, which means it's basically not reacting at all. $409.32. It's up about $1 this morning. I have said it often. I'll say it one more time. Microsoft will be the first to blink in this game of capex chicken. And this is now, in my opinion, the third data point that suggests Microsoft is already blinking or is in the process of blinking. This is a very slow blink, apparently. Between the data center in Wisconsin and the comments on that podcast about being power constrained, not GPU constrained. Now this TD Cowen note, those three data points combined, something is up at Microsoft. And then if Microsoft is going to at some point cut back on their capex, or maybe they're spending it all on power and not on GPUs, well, then how far behind is Google? How far behind is Amazon, Meta, Tesla, you name it, all the other ones? Well, we'll find out. We'll find out. We got NVIDIA's earnings later this week. I'm sure NVIDIA is going to post an amazing number, but it's all about that forward guidance. What are they going to project for next year? All right. Meanwhile, we got Berkshire Hathaway operating earnings surged 71% in the fourth quarter, and their cash hoard balloons to a record $334 billion. That cash hoard, guys, that is the story here. Berkshire Hathaway reported a massive surge in fourth quarter earnings from its operating business, driven in large part by insurance, while its cash holdings swelled to a record level. Let's see. The Warren Buffett-led conglomerate said its operating profit, which encompasses earnings from the company's wholly owned businesses, skyrocketed 71% to $14.5 billion during the final 3 months of 2024. That was led by a whopping 302% jump in insurance underwriting from the year early period to $3.4 billion. Insurance investment income also ballooned by nearly 50% to $4.088 billion. Guys, it's worth pointing out, they mentioned later in the article that they're expecting at least $1 billion hit from the fires in LA. So that's going to hurt the insurance business moving forward. But the big story here, cash holdings topped $330 billion. Berkshire Hathaway ended 2024 with $334.2 billion in cash, up from $325.2 at the end of the third quarter. This fortress comes as Buffett struggles to find his next big investment target. $334 billion in cash, guys. I mean, look, they're doing everything they can to sound optimistic, and they're saying, yeah, we still own a lot of securities, and we're very proud of the companies that we own. But Jesus, guys, $334 billion of cash. They are positioned for freaking doomsday at Berkshire Hathaway. They are ready to buy everything when it goes on sale. They've been doing this for more than a year now. Now, check out this one. Shout out to my moderator, Mish, who found this. This is a quote from Clive Thompson on LinkedIn. He's saying, this is what Warren Buffett said in his annual shareholder letter published today. Paper money can see its value evaporate if fiscal folly prevails. In some countries, this reckless practice has become habitual. And in our country's short history, the U.S. has come close to the edge. Fixed coupon bonds provide no protection against runaway currency. Now, when he's talking about fixed coupon bonds, in my opinion, he's referring to the long end of the yield curve, your 10s, 20s, and 30-year treasuries. Buffett is saying, I am not touching those things at all. Buffett right now is sitting almost entirely, or at least that $334 billion in cash, is sitting almost entirely in treasury bills, 1 month, 2 month, 3 month. All right, the short-term stuff. Now, there's another way to interpret this, and this is what Mish's interpretation was, and I got to agree with it. I mean, this is as bullish gold as Warren Buffett has ever gotten in my life. Now, there's making no mention of gold here, but what is the alternative to gold, to fixed coupon bonds on the long end of the yield curve? Well, the alternative is gold here. Now, Buffett has historically never been a fan of gold. He's always said there's no point in owning gold because it doesn't yield anything. So again, this is the most bullish gold you're probably ever going to get out of Buffett. But the guy's sitting on $334 billion. And right now, that is all parked at 4% in T-bills. Also worth pointing out, Warren Buffett is not buying back any Berkshire Hathaway stock here. He would rather make 4% in T-bills than buy back his own stock. Again, Buffett is not projecting a lot of confidence about this market here. Now, Berkshire Hathaway stock is up 1.15% this morning, trading at $727,000 a share. This company doesn't ever split, but the stock is up on this news. Good earnings from Berkshire. Also going on, speaking of big piles of cash, look at Jamie Dimon. He abruptly dumps $233,770,000 worth of JP Morgan stock as bank shares tap all-time highs. Let's see. New SEC filings show Dimon sold a total of 866,361 shares at a price of $269.83 on Thursday, worth a whopping $233.77 million. That's according to an SEC Form 4 filing. The shares sold are attributed to various entities, including his family trusts and LLCs and his wife. As Dimon executed the sale on February 20th, shares of JP Morgan Chase sank from record highs to around $278, down to $266. In February of last year, Dimon initiated his first ever sale of company stocks since becoming CEO in 2005. He then executed another sale in April, completing a combined $182 million of sales in 2024. So look, combined, we're over $400 million worth of stock that he's sold here. Actually getting pretty close to 5 here almost. Although Dimon has not made public comments on the sales, a company filing said they're part of a predetermined plan for financial diversification and tax planning purposes. They always say that when CEOs sell. Dimon continues to believe the company's prospects are very strong and his stake in the company will remain very significant. As of last year, Dimon owned something like 7 million shares worth of JPM stock. So if you add up all the shares that he sold last year plus this year, it's somewhere around 20 to 30% of his total holdings that he's unloaded. But look, CEOs selling stock is never really bullish, but right now JPM shareholders are liking the news. It's $265 a share, up about 86 cents here, up about 1/3%. Let's do a couple more quick ones. Congo suspends cobalt exports for 4 months amid oversupply. This is pretty interesting. Pay attention, all you EV bulls. Look, there's ample evidence that electric vehicles are having trouble here. Well, here's more. The Democratic Republic of Congo says it's suspending cobalt exports for 4 months to rein in oversupply of the battery metal on the international market. Cobalt production in Congo, which produces about 3/4 of the world's supply of the material used in electric vehicle batteries, has soared in recent years as China's CMOC group ramped up output at 2 large mines in the country, causing supply to outpace demand and prices to tumble. Exports must be aligned with world demand, said Patrick Lubeya, president of the Authority for the Regulation and Control of Strategic Mineral Substances, or ARICOMS. told Bloomberg in a written response. So more bad news for EVs here, guys. Probably not good for Tesla, probably not good for your BYD or your Rivian shareholders as well. Battery metal is going to get a little bit more expensive. And why are they doing this? Because the metals are piling up, because EV sales just aren't growing as much as they thought they would. We're going to talk real quick about Domino's here. Domino's, look, earnings, they were up year over year, but earnings and revenue both missed expectations here. So Domino's not having a very good morning. The big story here, U.S. same-store sales for Domino's climbed just 0.4%. That's a pretty lousy number for the fourth quarter there. Domino's had historically been doing very good. They have been outpacing their competition. Some of their promos that they had been doing to attract more lower-income consumers had been working very well. That abruptly stopped in the fourth quarter. Domino's Pizza down about 4.5% here this morning, trading at $441, down about $21. Another sign of the bifurcation in the U.S. economy, people buying less pizza. And last but not least, I want to send a shout out to my friends at Macro Edge, who put this one out just, when was this? This was over the weekend. Job cuts hit an all-time series high in February of 2025, driven by thousands of retail store closures, Trump admin layoffs of probationary employees. So Macro Edge, they have this data point that they put out, their job cuts tracker. They just take an amalgamation of all the stories about planned layoffs and buyouts and firings, and then they put out a monthly total for that figure. Now, one thing that was important to note, we've seen initial jobless claims have been pretty low for the first few weeks of this year, in particular January. Look at the January bar. It was pretty low if you compare that to, say, January of 2024, which was significantly higher. Well, that abruptly changed. For whatever reason, in February, we saw a big spike. Obviously, federal job cuts are contributing to that, but this will take some time to show up in any of the initial jobless claims. It'll take even longer to show up in the unemployment numbers, but this is the first sign of weakness in the labor market that we've seen in quite a while. So shout out to my friends at Macro Edge. It seems those job losses are finally starting to materialize. And I just want to say thank you very much to the Pasta Man. Thank you so much, Nashville, for supporting the channel. He says, Howard Buffett article on gold. That'd be Warren Buffett, or Warren Hughes or Howard Buffett. I don't know, one or the other. Papa Buffett loves gold. He stopped short. He didn't quite endorse gold there, right? I mean, he's basically saying, fixed coupon long-term bonds are lousy investments, all right? Tell me you like gold without telling me you really like gold. That's what he's saying there, because if you don't like fixed coupon long duration bonds, the most historical competition for that market is gold, right? A way to preserve purchasing power. Now, Buffett is not buying gold. I just want to emphasize that. And I don't think Buffett is going to buy gold. He spent his whole life talking about why he doesn't like gold, but he's also bad-mouthing fiat currency quite a bit there. He's making reference to, the decline of fiscal responsibility. Look, fiscal responsibility, this world waved bye-bye to that a long time ago. Now we're finally talking about spending cuts here in the United States. Maybe that's going to play out, maybe not. Things in Europe, the fiscal situation in Europe is about to get a whole hell of a lot worse, because Europe is going to have to start spending money on their own defense for a change. The United States is not going to be spending a lot of money. Oh, Mish is saying Howard was daddy. I guess Howard was daddy Buffett. I didn't know that. But anyways, guys, the fiscal responsibility thing, as much as I'd like to see it make a comeback, it's probably not going to. I see glimmers of hope. I like what Doge is doing. I think trimming the federal government, maybe trimming isn't a very word. I think decapitating the federal government is a very good idea, drastically reducing the size and spending on government, the scope of government. It's ineffective, it's inefficient, and it's wasteful. That being said, I remain skeptical. Some of the numbers that Doge has been putting out, they're a little bit or a lot of bit inflated depending on who you ask. And really, we're not going to get our fiscal house in order if we don't talk about the things people don't want to talk about, namely Social Security, Medicare, Medicaid. This is where most of the spending goes. And let's throw defense in there while we're at it. We're finally talking about defense. That's good. But those three big entitlement programs, if you really want to ever have any hope of balancing the budget, those programs need to be addressed. There is no amount of taxation that could ever make those three programs solvent, ever. There's just not enough money in the world to make that work. So until we talk about that, any talk of fiscal responsibility just remains fluff. Thank you very much, Nashville, for the super chat, support of the channel. Again, Warren, not quite embracing gold, but he's getting close there. And Hunt and Cover, thank you, sir, for supporting the channel. He says, Monday morning profit sharing. All right, well, salute. Congratulations on your profits. He says, thanks for the Monday melon patch. Appreciate the good vibes, Hunt and Cover. Thank you for supporting the channel, sir, as well as thank you for being a melon head for so long. I appreciate that very much. And thank you, everybody, for having your coffee with the melon heads. 2 days, Super Micro. You got 2 days. But, hey, what's the rush? It was only due in August. Thank you guys for the super chats and the generosity supporting the channel. Thank you to my Patreon supporters and magnanimous melon heads on YouTube. You guys rock. Links down below to all that good stuff. Should you feel so inclined. NVIDIA earnings on Wednesday. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.